Direct and Kunj Bansal of Centrum Wealth Management join in to this discussion. Kunj, I'm going to start with you. We just heard, Jonathan Garner from Morgan Stanley saying that they continue to be bullish on India in a relative sense compared to other emerging markets. So, do you think that this level of 8,000 could be protected on the index?
So, specifically in terms of index number, very difficult to say. That probably can be analyzed more from the technical point of view. But if one looks, or rather keeps aside the short-term impacts that have been there, so we have clearly seen the growth numbers in this quarter being subdued and likely to continue in the June quarter as well. Over a medium to long term, there is a clarity that the growth will be there, and why that confidence comes is that India's economy, or rather the corporate sector, if I use the word, is well diversified across sectors and across geographies. So you have companies which have diversified revenues from exports, anywhere in the range of 30 to 70-80% across different industries. So if at all one has a concern on the Indian economy, one can take comfort from the fact that such sectors or the companies can keep growing from the other geographies. Similarly, if one has a concern on continued slowdown in the investment-oriented sectors, one can take a comfort that 1.2 billion economy at the end of the day has certain minimum level of consumption. So it will be back to the defensives. So I think keeping those things in mind, there is obviously a clearly over a medium to long term view, there is no concern in terms of upward movement of the Indian market.
All right. Kunj, tell us about some stocks that one can buy for the longer term. You've picked out JK Lakshmi Cement. Is that the only cement stock that you like, or are the larger ones also worth looking at?
So just a correction, it's not JK Lakshmi, it's JK Cement.
Okay.
So just to clarify, there is JK Lakshmi as well. And the reason I have picked up JK Cement is, or before that, if I very briefly go to the 2 or 3 factors which one should keep in mind while selecting stocks at this point of time, post the recent result season being over. So ideally, yes, with the correction, the stocks should have corrected so that you have valuation comfort. 2, hopefully you should not be expecting subdued results or negative surprises starting from immediate quarter if short term also is one of the criteria in mind. And 3, obviously over a period of time they should give growth. So that's the reason for choosing JK Cement, that while in the cement pack as a whole we have clearly seen a subdued quarter for the March which has just gone, and so is the expectation for June quarter. But this is a company which derives, my numbers could be a little bit here or there, but 30% of its top line from white cement. And at a EBITDA level, I think roughly around 60%. Of course, the margins also in white cement are far higher than the grey cement. And for the March quarter, their white cement volumes are up 10% year on year compared to the grey cement volumes across the industries which are down. So that's the reason that while, yes, grey cement still has a concern on the growth, the white cement business of this particular company is the one which is giving it it's a positive growth, and that's the reason for.
All right, but Kunj, you have identified some more stocks for us. You like PTC India Financials. What's the trigger there?
So the trigger is, as I was saying earlier, that in the current market, where are the corrections that have happened along with the market, or maybe more or less with the market, but the growth and the fundamentals is still staying in place. So here is one stock which got sharply hammered post its March quarter numbers announcement, and rightly so, or maybe not rightly so. Why I am saying that is that because company made some extra cautious provisions which got seen as a degrowth in the profitability of the company, which is not the case. So if I look at some numbers going forward, its net interest income is likely to grow in the range of 25 to 30% over the next 2 years. Return on asset closer to 3.5%, and now with this correction available at a price to book forward of 1.1. So that I think is a very good combination of a valuation, one price to book 1.1, as I said, with the return on asset likely to be closer to 3.5%. Also, the business of the company, so it doesn't have any loans to SEBs, if at all that is a concern if some investors have. And also the fact that slowly and company is increasing its exposure to renewable energy, which is the segment which is likely to record higher growth compared to the traditional energy segment of thermal power. So these are the reasons that this stock gives an excellent opportunity for investors to buy it with a medium term.
All right. Thanks a lot for that, Kunj, for joining us with your ideas early morning.